have kickstarted the earnings seasons with the TCS that has come out with its Q2 numbers, and the revenue has gone up 2.6% at 64,259 crore rupees versus 62,600 crores. PAT has gone down at 11,900 crores versus 12,040 crore rupees, whereas the EBIT is at 15,465 crores versus 15,442 crores on a sequential basis. And the margin has come down at 24% versus the 24.9% earlier on, and the revenue is in line with ET Now's estimate, whereas PAT and the margin numbers are below what we were expecting. So that's the snapshot of the Q2 numbers for TCS. But Anisha Jain is also here to break down the numbers for us. Let's go across and take a look.
Well, it's a mixed set coming in from TCS this time. Even though the revenue has managed to beat expectations, there is a bit of a miss coming in on the margin front, and that has led to a bit of a disappointment on the bottom line as well. The rupee revenue came in at 64,250 crore thereabouts, slightly better versus our expectation. The dollar revenue stood at around $7.67 billion. We were working with a number of $7.66 billion, so broadly in line to slightly better on the top line. Where the company missed the mark was clearly on margin front. Usually the first quarter is the weakest quarter for the company, and second quarter they claw back the margins because in first quarter there's the impact of wage hike, but that did not happen this time around. In fact, sequentially the margins have dipped a bit. The actual number came in at 24.06% as compared to 24.9% that we had seen in the quarter gone by. So margin disappointment is something which the street would like more clarity about, and that has led to the miss on the bottom line front as well. The profitability has come in at 11,909 crores. We were working with a number of around 12,040 crore, so almost 100 crore miss coming in on the bottom line as well. In terms of the commentary coming in from the company, well, they say that the cautious environment continued into Q2 as well. Where there was a glimmer of recovery was clearly BFSI, wherein the company is talking about how the company's biggest vertical, BFSI, has shown signs of recovery. They also saw a strong performance in the growth markets, and they stayed focused on sharpening the value proposition that they have been providing to clients. Samir talks about how the strategic investments were made in this quarter in the talent and infrastructure, and that is why there is a bit of a miss coming in as far as margin is concerned. But he's quite confident that the long-term cost structures remain unchanged, and they remain confident in the ability to continue delivering industry-leading profitable growth. In terms of the headcount addition, it was a number of around 5,000 to 5,500 headcount which was added in this quarter, and even attrition has come off a bit, which is just around that 11 to 12% mark on the attrition. So overall, a mixed set coming in. While the top line is strong, the margin is a bit of a miss.
And
if you like this video, then like, share and subscribe to ET Now.